Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 9th of March. I'm Daniel Lam, your host for the podcast. We're entering into yet more complications in the markets. The US economy lost jobs in February. The non-farm payrolls fell by 92,000 for the month, compared with the estimate for 50,000 and below the downwardly revised January total of 126,000. February marked the third time in the past 5 months that payrolls declined, following a sharp revision showing a drop of 17,000 in December. Now, at the same time, the unemployment rate edged higher to 4.4% as jobs declined across key areas. But wages did rise more than expected, with average hourly earnings increased by 40 basis points for the month and 3.8% from a year ago. Healthcare, which has been the primary growth driver in payrolls for at least the past year, saw a loss of 28,000, due largely to a major strike that sidelined more than 30,000 workers in Hawaii and California. That strike has been resolved, but it happened during the BLS survey week, so it was subtracted from the jobs total. Information services, a sector hit by AI-related cuts, also lost jobs, down 11,000 as part of a 12-month trend in which the sector has lost an average of 5,000 jobs per month. Now, asset prices did not take the report well, with S&P 500 falling by 1.3% for the day and getting close to the key support level at 6,700. Now, the US dollar, which has seen safe haven flow since the conflict in the Middle East, also came off slightly. And the VIX index, the short-term volatility indicator of S&P 500, spiked sharply from closer to the 20 level, which can be read as a level of caution, to near the 30 level, which historically is a level of stress. The non-farm payroll overnight is adding to a situation of a perfect storm, adding stress to market concerns that the Middle East conflict is going to increase inflation via elevated oil prices. Following the payrolls report, markets pulled forward expectations for the next cut to July and priced in a greater chance of 2 cuts before the end of the year. But the key variable is still about how long the conflict in the Middle East is going to last. The uncertainties in the markets means it is important to have hedges in place, such as gold and US Treasury inflation protected securities. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.